The business landscape on December 2nd, 2025 was defined by a critical tension. Short-term relief from domestic political instability was immediately complicated by warnings of deteriorating global economic health and heightened structural risks. Markets reacted positively to immediate news while simultaneously digesting sobering long-term projections and revolutionary shifts in financial technology. The analysis of the day's business events reveals 5 interconnected themes shaping the global outlook. First, macro volatility is being triggered by policy chaos. U.S. equity futures rallied strongly, driven by widespread optimism regarding the impending end of the U.S. government shutdown. However, this positive sentiment is highly fragile due to the indefinite delay of critical economic data, including GDP and key consumer spending figures. Analysts anticipate that the eventual release of this accumulated data will cause significant volatility in the markets, creating dangerous uncertainty leading into the Federal Reserve's decisive meeting. Second, the global outlook is deteriorating. The Organization for Economic Cooperation and Development, OECD, released its latest economic outlook, projecting a continued deceleration of global growth into 2026, citing persistent trade barriers, geopolitical conflicts, and crippling policy uncertainty as the primary structural impediments to the world economy. Third, traditional finance is embracing public blockchain. J.P. Morgan Chase made a landmark move toward integrating decentralized infrastructure into institutional finance by rolling out JPM Coin, a deposit token backed by U.S. dollars, for institutional settlement. Crucially, this system is operating on Base, a public Ethereum Layer 2 blockchain affiliated with Coinbase. Fourth, AI governance is becoming a compliance imperative. Addressing the escalating threat of generative artificial intelligence, Fujitsu established Frontria, a major international consortium bringing together over 50 global organizations to collaboratively combat AI-generated disinformation and misinformation. Finally, the technology sector is showing resilience, providing a critical counterweight to the negative geopolitical and macroeconomic forecasts. Major players such as AMD, Infineon, and Hon Hai delivered positive earnings outlooks, suggesting resilient underlying demand for semiconductors and advanced technology components fueled by sustained investment in AI infrastructure. The start of December 2025 was dominated by the immediate effects of the resolution of the protracted U.S. government shutdown and the release of high-level institutional economic forecasts, underscoring the deep impact political decisions now have on global commerce. The primary positive driver for markets globally was the growing optimism that the U.S. government shutdown was drawing to a close. This political relief immediately translated into market confidence, propelling U.S. equity futures higher ahead of the opening bell. Complementing this positive sentiment, news that President Trump planned to host top Wall Street executives for dinner at the White House was viewed as a step toward renewed dialogue and greater political certainty. Despite the political relief, the shutdown created a significant structural problem for financial markets, a pervasive data vacuum. The Bureau of Economic Analysis announced the cancellation or indefinite rescheduling of critical economic reports. The delay of these reports severely impairs the ability of the Federal Reserve and market participants to accurately gauge the state of the U.S. economy. Crucial indicators such as the gross domestic product third quarter 2025 advance estimate were canceled. Other vital releases, including personal income and outlays data for September and October 2025, were pushed back. This missing information is crucial because the economy is currently positioned at a crossroads where evidence of strong or soft consumer spending is necessary to justify the Fed's next move. Analysts point out that the absence of data forces investors to rely purely on sentiment, while the central bank remains functionally blind just weeks before a pivotal rate decision. The restart of U.S. data releases following the shutdown will inevitably create significant market volatility as the market digests weeks of economic intelligence rapidly. Based on the schedule of delayed economic data, the shutdown has caused the cancellation or rescheduling of high-impact metrics. The gross domestic product, Q3 2025 advance estimate, was canceled, removing a key gauge of long-term economic health. Personal income and outlays data for September was delayed to December 5th, while the October data and the GDP second estimate were also rescheduled. The absence of these specific data points creates a high volatility risk, as they are primary inputs for the Federal Reserve's upcoming interest rate decisions and measures of consumer spending strength. On December 2, 2025, the OECD published its latest economic outlook, delivering a sobering assessment that global economic growth is projected to slow further. The OECD projects global GDP growth to continue its deceleration, slowing from 3.3% in 2024 to 3.2% in 2025, and further declining to 2.9% in 2026. This slowdown is broad-based, affecting the United States, the euro area, and China. Crucially, the OECD attributes the global slowdown less to natural economic cycles and more to political and trade-related factors, specifically substantial increases in barriers to trade and heightened policy uncertainty. The implication is that global business health is now highly sensitive to policy decisions like tariffs and domestic political stability. Regarding inflation, the report projects a decline across most G20 economies, but cautions that pressures could remain if trade costs rise further. Global capital markets on December 2nd presented conflicting signals, balancing the structural deceleration warned by the OECD with undeniable resilience in the technology sector. U.S. indices closed lower on December 1st, reflecting broader macro uncertainty, with the S&P 500, Dow Jones, and Nasdaq Composite all posting losses. European markets also showed weakness. However, the outlook changed sharply heading into December 2nd trading, with U.S. equity futures rallying due to overwhelming positive corporate news from the technology supply chain. AMD, Infineon, and Hon Hai all delivered positive outlooks, suggesting that the underlying demand drivers for the AI economy are powerful enough to partially insulate the technology sector from the broader anxieties impacting older, more cyclical industries. Asian markets reflected this technological optimism. Market performance data as of the opening on December 2nd shows a divergence based on sector and region. The S&P 500, Dow Jones, and Nasdaq Composite all closed lower the previous day, down 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0.90%, 0.53%, 0 and 0.38% respectively, due to macro headwinds, though futures indicated a rebound driven by tech earnings and shutdown optimism. In Europe, the FTSE 100 declined 0.18% amid a broader slowdown. Conversely, Asia showed resilience, with the Nikkei 225 opening 0.39% higher, buoyed by optimism in the Asian tech supply chain. Gold prices experienced a slight retreat on December 2nd, characterized by analysts as profit booking, after the yellow metal's remarkable rise to all-time highs in October 2025. Despite the intraday dip, gold remains structurally supported by rising market expectations for a potential Federal Reserve interest rate cut. This high price point reflects that investors are hedging against a sustained period of high uncertainty. In the energy sector, the International Energy Agency delivered a surprising report suggesting that global oil consumption could potentially continue growing until 2050, offering a powerful long-term bullish signal for the energy market. Looking ahead, Moody's anticipates a return of leveraged buyout and M&A deals in 2026, driven by borrower-friendly markets, though this comes with a warning of heightened credit risks. December 2nd, 2025, highlighted the continued aggressive push by established financial institutions and technology firms into advanced digital infrastructure. In a move widely regarded as a watershed moment, JP Morgan Chase and Company announced the expansion of its JPM Coin USD deposit token for institutional clients. JPM Coin functions as a tokenized representation of traditional USD deposits, enabling institutional users to move money securely and instantaneously on-chain. The strategic significance lies in the choice of infrastructure. The JPM coin is now available for settlement on Base, the Ethereum Layer 2 public blockchain built within Coinbase. This decision validates that the scalability and interoperability of public networks are now deemed essential for achieving true institutional settlement. Simultaneously, the necessity of governing advanced digital technology was brought to the forefront with the announcement of the Frontier Consortium, established by Fujitsu Limited. This international body comprises over 50 global organizations dedicated to collaboratively addressing the escalating challenges associated with artificial intelligence, specifically AI-generated disinformation and system vulnerabilities. The inclusion of major players from highly regulated sectors highlights that AI risk is now seen as systemic operational and financial risk. The formation of Frontier mandates that spending on AI security and trustworthiness platforms will accelerate rapidly in 2026. Geopolitical shifts continue to dictate long-term corporate strategy, pushing nations toward digital self-reliance. On December 2nd, Ooredoo, Qatar's leading telecommunications provider, signed a significant deal with Oracle to deploy Oracle Alloy. This platform allows Ooredoo to run its own sovereign, fully branded cloud environment, strengthening Qatar's digital sovereignty by ensuring complete control over data and governance. This deal is a decisive response to the geopolitical threat of declining international trust, as nations are increasingly unwilling to entrust critical national data to foreign hyperscale providers. The broader geopolitical environment is forcing businesses to entirely rethink sourcing strategies. Escalating trade tensions are viewed as the most significant conflict-related business risk for 2025. While tariffs are often imposed with the stated ambition of bolstering U.S. industry, research indicates an unintended counterproductive effect on the domestic supply chain. Small-scale manufacturers are being throttled by tariffs that increase the cost of essential inputs. As these small businesses play a vital role in specialized production networks, their failure risks undermining the very manufacturing resilience that the tariffs are designed to achieve. Market integrity remains a paramount concern, and December 2nd saw major regulatory action in an emerging market. The Securities and Exchange Board of India, SEBI, found that Dronacharya Aerial Innovations misused its initial public offering funds and misled investors. The investigation uncovered a systematic pattern of misuse, including covert transfers to related parties and the inflation of revenues through doubtful transactions. Furthermore, a pre-IPO scheme allowed early investors to receive huge volumes of shares at a drastically reduced cost, which they sold at peak prices to retail investors who subsequently suffered significant losses. This incident underscores the urgent need for enhanced regulatory scrutiny on fund utilization disclosures and related party transaction reporting. The analysis of the critical business news on December 2nd, 2025, yields a unified picture of a global economy at a crossroads, where technological acceleration and political stagnation clash. The immediate relief observed in U.S. equity futures is tenuous, overshadowed by the volatility guaranteed by the upcoming release of delayed economic data and a bearish long-term global outlook. Success in the coming year will rely less on traditional cyclical performance and more on a company's strategic resilience against policy-driven risks. Companies must institutionalize geopolitical risk mitigation, prepare for data localization, and model the cascading effects of trade policies. The creation of the Frontier Consortium demonstrates that investment in AI security is shifting to a core compliance cost. Additionally, JP Morgan's decision to move institutional deposit tokens onto a public blockchain accelerates the adoption of distributed ledger technology, signifying that public infrastructure is now essential for modern institutional settlement. The dual challenge for businesses entering 2026 is managing heightened credit risks while navigating a global environment where the integrity of financial data, market trust, and national policy can shift rapidly.